Welcome to Explain the Charts. Today, December 5th, 2025, we're diving deep into AUDUSD, a pair that has been making significant headlines. The Australian dollar has recently hit its highest level since October, trading firmly above 0.6600. This impressive rally is primarily driven by building speculation of a hawkish Reserve Bank of Australia, suggesting the RBA is done with rate cuts and potentially even considering hikes in 2026. Conversely, the US dollar is facing downward pressure due to weaker-than-expected economic data and increasing probabilities of Federal Reserve rate cuts, with an 85% chance of a 25 basis point cut priced in for December. Looking at the daily chart, we can clearly see this strong bullish momentum that began building in mid-November and has continued into December. Specifically, from November 25th, the AUDUSD has seen a consistent upward trend, pushing from the mid-0.64 range to its current levels above 0.6600. This aligns perfectly with news of strong Australian CPI data for October and robust household spending, reinforcing the RBA's patient and potentially hawkish stance. The divergence in monetary policy expectations between the RBA and the dovish Fed is providing a significant tailwind for the Aussie. The pair has comfortably moved above key daily moving averages, including the MA20, MA50, and MA200, which are noted as robust bullish signals in our news sources. The 200-day simple moving average, situated around 0.6468, remains a critical support level, indicating a sustained bullish bias as long as the price holds above it. Now, let's zoom into the 1-hour chart to observe the more immediate price action and recent consolidation. From early December 3rd, after a slight dip, we see a steady climb towards the 0.6620 to 0.6630 resistance zone, a level identified in our news analysis as October's peak. The price is currently hovering around the 0.6600 to 0.6620 range, showing some indecision as it tests this immediate overhead resistance. Technical oscillators like the Relative Strength Index are challenging the 65 level, and the average directional index is climbing past 17, further suggesting a strengthening upward trend. However, some reports also highlight potential short-term overbought conditions, which might lead to a brief pullback or consolidation before another move. Transitioning to the 15-minute chart, we gain an even closer look at the very recent price dynamics, specifically for December 4th and the early hours of December 5th. We can see the market has consolidated in a tight band after reaching highs around 0.6624 on December 4th. The last few candles show minor bearish pressure, indicating that traders might be taking profits or awaiting fresh catalysts, such as the upcoming US PCE price index report. This short-term behavior reflects the caution mentioned in the news ahead of significant U.S. economic data releases, which could heavily influence the U.S. dollar's direction. A breakout above this current consolidation range on the 15-minute chart, especially with strong volume, would confirm a continuation of the short-term bullish trend. Conversely, a sustained dip below immediate minor support levels around 0.6600 could signal a deeper, albeit potentially temporary, retracement. Returning to the daily chart, it's crucial to acknowledge the longer-term context and some contrasting predictions. While short-term sentiment is bullish, some analysts, like Bank of America, forecast AUDUSD falling to 0.63 in Q1 2026, citing potential weakness in China. We've seen significant historical drops in the past, such as the sharp decline in April 2025, where the Aussie dollar slumped below 0.60 US cents, echoing concerns about global trade tensions or RBA dovish bets at the time. The dramatic candle on December 25, 2024, showing a low of 0.54287, also serves as a stark reminder of the pair's volatility under specific market conditions. These long-term bearish outlooks, conflicting with the immediate bullish trend, highlight the importance of monitoring China's economic health and broader geopolitical developments, especially regarding U.S.-China trade relations. The pair remains in a strong overall uptrend since its April 2025 lows, but these historical data points remind us of the potential for sharp reversals. To recap, AUDUSD is currently in a strong short-term bullish trend, driven by a hawkish RBA and dovish Fed expectations, with the price comfortably above its daily moving averages. Key immediate resistance levels to watch are 0.6620 to 0.6630, and then the 2025 ceiling at 0.6707. On the support side, 0.6580 is holding for now, with stronger support at 0.6530, 55-day and 100-day SMAs, and the critical 200-day SMA at 0.6468. A sustained breakout above 0.6630 is likely, given the fundamental drivers, with a 70% likelihood if US PCE data confirms Fed dovishness. However, a significant drop below 0.6468 would invalidate the near-term bullish structure and could lead to a correction towards 0.6300. A 30% likelihood if US data surprises to the upside or China's economy weakens further. Traders should closely monitor the upcoming US PCE data, Australian GDP, and any new statements from the RBA or Fed. Always be mindful of volume accompanying price movements for confirmation. Remember, this is not financial advice, and you should always do your own research before making any investment decisions. Thank you for watching Explain the Charts, and we'll see you in the next one.